Tata Motors is all set to deliver its Q3 report card this evening, and by the looks of it, it's going to be a good set for the company. It's been a good quarter as well for the company. They've seen good improvement across domestic as well as JLR business. India business losses are likely to reduce because of demand recovery in the commercial vehicle segment and good demand seen in the passenger vehicle segment as well. First, let's look at the consolidated picture. We're looking at a revenue of 76,770 crores, an uptick of 7% year on year. Profits likely to be coming in at 2,000 crores versus 1755.9 crores, again an uptick of almost 14% on the year on year basis. EBITDA is likely to come in at 9,900 crores versus 7,393.8 crores, up almost 35%. Margin expansion is also likely to be quite healthy and quite significant. Margins are seen at 12.9% versus 10.3%. Consolidated revenues should also rise primarily because of JLR and standalone division improvement. Margin also likely to see a solid expansion on the back of these two being the key triggers for growth and for recovery for Tata Motors consolidated performance. Moving on to JLR then. While yes, the company saw a 21% YOY decline in volumes, what we expect is that the revenue will see a relatively lower quantum of decline. 5 to 7% degrowth is what we're expecting on the revenue front on back of better mix, which clearly seems to have aided or is likely to aid their top line performance. Margins likely to improve for JLR by about 400 basis points quarter on quarter on the back of operating leverage and strong mix. Like I said, they saw strong mix of Range Rover and Range Rover Sport in the quarter gone by, and that's likely to augur well for the automotive giant. Higher China mix, lower Jaguar mix, cost reduction efforts, these are also likely to be some key drivers as far as the overall performance for JLR is concerned. And of course, this will sort of convert into a healthy recovery and a healthy performance from Tata Motors on a consolidated basis. Talking about factors to watch out for. India business outlook will be important to see what is the market share gain in the passenger vehicle segment. Recovery trends in the CV space will be important to watch out for, because what we hear from key OEMs in the form of interaction and news reports is that CV cycle definitely has started to bottom out, and we want to know from Tata Motors as well what the key trends are there. JLR's impact on Brexit on manufacturing, demand recovery trends at JLR, inventory situation globally. So these are the key monitorables for JLR. Overall, like I said, we're expecting a good set unless there is a one-off or there is any negative surprise that could sort of hit their overall performance. But going by the volume trends, the mix that they have seen in the quarter gone by for JLR, it is likely to be a good quarter.